Boom, we are alive, ladies and gentlemen. Thanks for joining us today. It took me a little moment longer, I thought, to get online, but technically this should be fun here. Should be streaming through YouTube at the moment. And then in a second, it'll also be on Rumble and X. So just kind of a fun side point there. We're going to take a look at some of the charts and pontificate about price movement for fun. And we're going to end today's video with a little bit of a riff or jam too for fun. A few of you had asked for some live music stuff, so I'll also include that. What I wanted to do, though, was take a look at Bitcoin's price range at the moment. Everything's going smoothly. You guys are all giving me the thumbs up in the live stream there. And also, let's check. It appears to be working on Rumble as well. Nice work. Okay, groovy. I'm glad that worked. We can technically create a live stream scheduled on YouTube and Rumble at the same time. So it took a minute, but we figured it out. Okay, so back over to the charts here. Should be able to see our screen. Yeah, awesome. This is the horizontal trading range we've been following for Bitcoin. Now, one of the reasons why I continue to share this methodology and kind of consistently is because over the many years of following the markets, it's been the most consistent for anticipating what markets do next. Now, it's not always right. You can kind of front run yourself. One of the things about reaccumulation, which is the horizontal range we're looking at today, it can quickly become distribution. Now, I don't think it's distribution for Bitcoin. I think Bitcoin here is likely, and hopefully, this is one of the things I've been waiting for this whole cycle upwards, was something that represented a really beautiful trading range. Because, for instance, when let's look at Solana. On the last trading range that formed here over the month and kind of the price movement throughout this, there's some really key points that moved throughout this range. Now, you can tell today I'm using just a line chart, got rid of some of the candles. I used a lot of indicators yesterday, but generally what I would prefer to do is try to remove as much emotion from perceiving the market as possible. That way it's not either forcing your fear or your greed in terms of why you're making a decision. And the trading method here, where we went up to our buying climax, we had our shakeouts, our secondary tests, our springs, the test, the jump across the creek, and the creek test, and this beautiful 100% breakout, is that there's a very high level of confidence for potential ideas right around this point where we kind of back test the creek. Now, we're also following along very closely with Avalanche. Avalanche had a lot more liquidity hidden inside of it. The backtest of the creek was really sharp back down here in terms of the backup range. And if you compare both Solana and Avalanche here, they're very similar. Now, Solana has clearly been stronger than Avalanche. While Avalanche is down, Solana is actually still up in the top part of its range here. So again, the idea here is that it's too early to think that this is going to be distribution, but it was actually the kind of warning sign we were looking from is actually from Fetch. Now, when something is up so high, it's easier to assume that it's going to go down instead of up, effectively. So the trading range is taking place here. Quite often when we come back above the top of the range, can't break out and continue into the middle of the range, this is usually distribution. When a trading range is really beautiful. Now, again, notice with Solana, we didn't have that shift. If even in the previous accumulation range, we had followed very beautiful setup here too. This one is not labeled anymore because we moved past this, but this trading range right here also did not come back into the box of the trading range at all during the LPS or the SOS and LPS phase. Once it back tested the box, it just moved outwards and upwards. So again, for Solana, we've moved outside of the back of the box. We've had our kind of SOS and backup phase right here. We've moved into the SOS and final LPS phase, and this is where things get a little bit trickier. This is where it can very quickly turn around, become distribution, and maybe come all the way back down to test $60, maybe $100. It's hard to say. And what this ends up being as a larger range, right? There could be the idea now that we come all the way back down here. I think some people in the bear group have speculated around $100 for Solana or something like that. And you form bigger trading ranges that can move throughout the bull market, the rest of the bull market cycle. I think that we're going to get a breather here. And again, this is based off the idea that we've only witnessed the primary shakeout and the first kind of automatic rally of this trading range. And one of two things are going to happen. We're going to come back down to the bottom of the box. We're going to scare people, which is actually bullish, into the halving, move back up and continue on the bullish trend. Or you could get, again, where I think distribution could occur. Often if you go up to the top of the box, you do something where you cannot break out, you perform a slightly distributed trading range here, you fall back into the box, can't break above the middle of the range of the POC and turn around. Now, I don't think ultimately this is bearish for Bitcoin. I think the likely idea here is that we see a spring somewhere in the near future and that we actually scare people and we don't get more euphoria here. I think it's the opposite effectively. So the greed will kind of be washed out by the fear of before the market continues through the halving. Now, again, the thing that's interesting here is that you could see larger distribution within the spring of Bitcoin because Bitcoin is kind of the central driver of this whole ecosystem. So much as, I guess one of the other things to notice too is when we look at the primary and traditional markets, they're all kind of moving the same. I think one of the easiest ways to recognize some of the like comp man or the composite operator, this theoretical anthropomorphic person that is basically all the market participants acting at once in unison without really knowing it. And you can see that, I think, more obvious when you look at the way, let's say, all of the different tokens price points move very similarly. And then you have outliers here. Clearly, this one had more of a spike, right? So what is that one? Probably, it's a Toncoin. I have no idea what that is. Just whatever was in the top there. So again, you see many of these have the very similar footprints as we look across the chart, and that's because the market makers are all effectively operating in unison when you look at it. This would be tether potentially, but again, just so many similarities within the footprint and a few outliers. But for the most part, they're going down, finding some type of semblance of a bounce return, some strength in particular assets. And usually those are the ones to watch out for as well. Where are you finding strength? Not always, but often. So when you look at the market as a single individual kind of controlling the prices, this is where people start to call it manipulation. They're manipulating the markets by doing X, Y, or Z. It's usually just buying or selling. And buying or selling is enough to manipulate the markets in its entirety. Or at least look like that, because that's why the markets are always operating in what appears to be a uniform type of fashion. So with the previous prices of fetch up so high already, some of you had asked is like, well, why not look at things that haven't moved yet? And generally in the market space, if let's say you're following an asset that hasn't doubled or tripled in price, it's not going to, or the likelihood of it outperforming the rest of the market is very low. It's usually easier to follow the leaders and then just gain even more strength off of the apparent leaders, right? I mean, Fetch is a great example of this kind of in function, right? You're like, oh, well, look, Fetch was already up, 220%, or from January even higher, up 650%. You're like, if something's up 650% and something else is down, only up 100%, why you think, oh, maybe there's more room for upside in the thing that hasn't gone up as much, missing out on the idea that Fetch continued on for another 3 to 6x, while something might have sat stagnant with no growth at all. And the reason you want to follow the leader is because it's giving you an indication of what the market believes instead of what you believe. Now, you might be right in the future, but generally, if the market is saying something today, it's easier to follow through with that. So it's easier just to follow the market leaders as in comparison with try to find something that hasn't yet exploded, and you're looking for the type of growth that's something that could go down 80% if you're patient, because it had so much growth already, could go up another 10x. And that's a really kind of where something else might only do a 2x because it has had no growth at all. So I think Fetch is a great storyline around that example. And then also recognize a lot of what we're witnessing here is just going to be more opportunity. I think the bull market is not finished. We've had two basically perfect reaccumulation ranges within this market that yielded multiple hundreds of percent in many different assets. So that's a key point to think that, okay, well, distribution is definitely closer than it was in these previous two when the confidence level was really high. So now is the time to turn on more of a defensive positionary thinking, which is that the chances are that there's enough retail here right now to get what will turn into a distribution basically from leverage trading. It'll wipe out a bunch of leverage traders. It'll dip down pretty low. It won't become a full distribution. It'll be like some type of reaccumulation after decline, and this will become the primary support now. And you have a larger trading range between, let's say, $120 and $200 for Solana before it goes for its last kind of ditch run for another 100% to 200%. It's just touch all-time highs, maybe higher, and then come back down again for a bear market. So it's not that this bull market is over, but there's a potential now where what this turns into, this top part of the range, it becomes temporary distribution into finding a much larger trading range. And then these two kind of previous trading ranges we were following become our primary support of this growth cycle. So this is what we talk about in the mathematics idea of scale and variance. It's a beautiful function, but it's so important to understand is that when you're looking at mountains, or any type of geological feature, it's really easy to confuse the scale if you don't know, which is why they constantly put reference pictures of here's this thing for scale so that you recognize how big it is, because so many features in nature are scale invariant, and you might see a picture of something that you think is just only a few inches away that is actually 1,000 feet above a particular viewpoint. So there's a few things that kind of go into this idea, but in mathematics, it's even more difficult to tell because it's just numbers. And numbers kind of flow into each other a little bit more easily than, say, a visual dynamic between a mountain and then the way the water carves something on the earth in a smaller feature like a river or a creek or just the rainfall itself. So these scale invariant patterns where we're witnessing something that can kind of telescope inside and outside of itself is important to remember, because first off, if we take a look at where we are and kind of where we started this, the bull market is well on its way. Okay, so people saying the bull market hasn't even started yet because we're not peaking out into new all-time highs for everything, don't know where the bull market starts. And it's important to remember this, that the bull market started way back here in December of 2020, when everyone's like, oh, Bitcoin's dead, FTX is over. That's when the bull market started, technically. It starts right when it ends. It's usually how it works. Something ends and then something new begins. So right at the very end of the bull market, or very end of the bear market, the bull market began, which is usually known as the spring within these accumulation cycles and are marked by peak highlights of fear. But again, we've seen beautiful reaccumulation structures here. I mean, these were picture perfect. I mean, looking back here now in retrospect in the line chart, it looks even more beautiful. I mean, often when we look at it with the candles, Heiken Ashi or other candles, there's all this emotion that's drawn in there by color. But look how simple and well refined this was as a trading range. Now, you'd have to done your homework, but ultimately, the question now of are we going to see distribution into a larger trading range, I think, is hyper important. It's not for sure yet. We haven't seen all of the structures kind of repeat itself. And as a matter of fact, you could make an argument that for Fetch, this is just part of a larger trading range and that we've just finished the automatic rally and we're about to see the first shakeout and maybe a spring that stays really strong and we don't go lower than $1.90. We just do something like this. But it's just, that was way bigger of a spring than I think we'd see, but something like this before moving higher. So again, it's just that because we've had two perfect reaccumulation ranges after an accumulation range, I think the question of seeing distribution after the third movement is important. So does the fifth cycle something like this, something about Elliott waves here too, I'm sure. But it'll be interesting to watch. I think the next kind of things we want to keep an eye on for is what happens with Avalanche. I think Avalanche will give us some really telltale signs, because it's very easily that this could be a spring. We come back into the box, we test the point of control, and we move higher, which would be amazing. Or we cannot, and we no longer make it back into the trading range for Avalanche, and we come back down lower. That could be a break sign too. So we're going to have multiple assets kind of telling us the same story. So it's something to keep in mind. With Bitcoin, it could look at a number of ways, but again, I think what's going to happen is that we get the spring here, which looks like temporary distribution, which could bring us, quite low for sure. Let's say it could bring us towards $120 for Solana. We form a much bigger LPS or type of trading range, but for now, it's just that this is the first kind of potential change of character we've seen in the market since the bull market started. And again, this is a long time ago, so just keep that in mind, is that you're looking at a function of, okay, we've been in accumulation, which is where the bull market starts effectively, for 569 days. We've now exited the trading range for Ethereum here, using as an example, for about 120 days to 130 days. So we're at least, let's say, around halfway to or 1/3 of the way through the market cycle here. Noting again that what we pointed out in our previous videos was when you look at the speed at which the bull market cycle is going up, and the long-term holders, or what's known as whales in traditional markets, start selling, is like right away. Basically, as soon as you start leaving the bottom of the range, large numbers of whales start selling into that price pressure to the upside, because they need to. If they don't sell all the way up, if they don't take profits all the way up, there's not enough room for them to take profits by the time they get to the top. So you see this capitulation between what's known long-term and short-term holders here for this Bitcoin chart. But effectively, again, what this is pointing out is that this is the first time that we've seen this temporary change of character, that even if we break down, I believe just leads to more bull market. So the bull market's not over, but it's important to be very not cautious, but more defensive here, because it could mean big price swings. For Ethereum, it could be down at 2,700 for a spring. We're not sure yet. It's, again, still too early to tell. I think both Avalanche, Fetch, and Solana are going to give us that data a little bit earlier. And with Bitcoin here, I think this looks like the best drawing. If we saw this kind of perfect reaccumulation range the way we saw with Solana, where it was like picture perfect, where even with Avalanche, although not perfect, lots more liquidity in there than we had imagined, still pretty perfect for the last two. I would like to see that for Bitcoin today, that we see this really nice horizontal reaccumulation range take place, kind of break interfere right into the middle of the halving, and then the breakout somewhere after. And then this could be large price swings in the other assets. So just a quick little update from yesterday's video around this particular thought process, because we're going to have an A or B type scenario here coming up soon. And being defensive right now could be useful, because there's the next part of the bull market is some of the fun, and the most fun and the least duration. So once we go through this kind of volatile speculative spot into the halving, I think we'll see more definitive data around how that price develops. And again, more room for upside. So again, it's not that the upside is over, or it's just that it's important to pay more attention, because it just means more opportunity. I guess in reality, it just means that there's more opportunity potentially right around the corner. So this next little phase will be good to keep our eyes on, because it's going to give us a lot of useful data. So is this spring or distribution? And we get a few different looks at that from different assets. And then, Bitcoin, generally, we want to assume that this is going to be some type of reaccumulation here before moving up. But again, this could become a temporary distribution where we drop back down even lower to 51 to 52,000. We see our last reaccumulation decline before we go up massively too. So both outcomes at the particular moment are bullish, even if we go lower. But there is lower involved, which at the moment just means more opportunity effectively. So but it'll be fun. This is actually going to be a great kind of learning exercise, because spotting distribution from reaccumulation is difficult, and it requires you to change your actually, there's a good way to kind of show this by looking at our YouTube videos. So I was noticing this today, because since early October, I've been very bullish. I'm saying everything is bullish all the time. Everything, pretty much literally buy anything that you want, is bullish. And then I looked at the most, just let's look at the live streams. I think more of them were also pre-recorded, but just for now, let's look at the live stream. So notice that every single video pretty much was green. There's a little bit of green and red here around Christmas too, which I think we kind of got right. And if we look at more of the videos, because I believe I was uploading more of them, I wasn't using those color coordinated thumbnails yet. Here 4 months ago, these were also green, but wasn't using the new thumbnail strategy, because, well, ChatGPT helped make a big difference in our thumbnails, because all this background stuff is all done by ChatGPT. Not that there's a ton of it, but it just made it a little bit easier to mess around. Anyways, the point of this, these have all been green basically, except for the last two. So we haven't really fluctuated on price sentiment at all up until this temporary change of character we're seeing now. And I think it's just good to address it early. I guess it's a learning process too. So I wanted to share that. I thought it was kind of interesting this morning, looking through all of our live stream views, noticing, hey, these are all literally every single one of these is actually green. Oh, awesome. Okay, so this groovy, everything seems to be working too on both of the awesome, on Twitter as well. Groovy. Stoked to see. Awesome. I'm glad I figured that thing out with Rumble, because I was enjoying streaming here too. So now I can schedule streams on YouTube and Rumble all at the same time and not conflict with one another by being a little bit tech savvy. Surprisingly, I actually know how to figure out how to use this damn thing. So okay, so what was some of the next stuff I wanted to look at? Just in general, I think we were looking at BTC ETF outflows, not a ton of outflows. Again, I think the other idea that I stated too was that don't expect there to be Bitcoin maximalists really coming from or buying through the ETFs. Like, it doesn't strike me, again, that the people who are most interested in the reasons why you'd want to own Bitcoin for the long term would be buying it through the ETF. I think most of those participants are usually looking for more shorter term gains. They're especially if they can move large sums of money in and out of an asset, like these high frequency funds as well. I suspect that they're interested in dollar gains at the moment still. I think in the future we'll have funds measured in Bitcoin, but for now, we're seeing strong outflows even on the first here of April at 302 million out, 217 in, and we totaled 169 out and 208 in. So both in and outflows are kind of matching each other right now. It's not seeing more strength on either side. It'll be fun to keep an eye on this. I think this will be telling. At what point are these bigger players happy with their speculative outgoing positions? So anyways, just a quick update. Point here is that we're in a perfect educational moment for understanding Bitcoin's, these trading ranges, I guess, whether it's Bitcoin's price or Solana's price or Fetch's price or Ethereum, any one of these, you can use this same idea of understanding where you are in between the greed and fear of the market. We're up higher in greed for sure than we were in fear when we first started posting about excess deaths. So we're looking for kind of an opposite of that. It could be a vindication of Pfizer is on trial for crimes against humanity. That would probably be the top of the market. Bottom of the market is when there's all these excess deaths and no one knows why. So we've come to identify these, I think, pretty well, and generally how to profit from that too is really by recognizing those trend shifts on both macro and micro levels. Again, remembering that we've been in a bull market for Bitcoin for quite some time. The first kind of SOS and backout moves here at around 30,000, up 250% since then. So the bull market is well on its way. And again, as we went over those previous charts, just notice the amount of players who are actually exiting on the entirety of the move to the upcycle, because they have to. That's the whole point. They buy a shit ton so that they can actually start selling more of what they have, to basically create the market cycle itself as well. So important psychology aspects there, but more importantly, just to understand that how that fear and greed sentiment looks on paper, because you don't always have to watch the charts. You don't have to watch the charts to know when like a pandemic is being declared or war is being declared. There's usually some market chaos and price arbitrage that you can take advantage of through that fear mechanism that people all go through. So yeah, chaotic moments are often the most profitable, and as things start to calm down, you start to see normalcy return. Pfizer's stock is, they're being sued for some vaccine, something or other, and then that's the top of the market for everything else, at least. Maybe not for Pfizer, but okay. Was there anything else I wanted to go over? No. I guess effectively, just to keep an eye on this, because this could become a larger trading range for Bitcoin as well. That could bring us down to 52,000 and do something like this. I would love to see this, especially because it would give us a support range building all the way back since the previous bull market cycle. This would be so beautiful. This would be one of the highest confidence bull market trades for the last part of Bitcoin's run out there. I suspect that the more large participants you add to a market, the more stable the market orientation becomes. Again, both of Solana's reaccumulation ranges here were picture fucking perfect, and I'm waiting for Bitcoin to have that right now. So it's either going to be the smaller trading range here between 75 to 57,000, or it's going to be a slightly larger trading range here somewhere between 50 and 70,000. Either way, both end up being bullish, so it doesn't really matter. Both are opportunities to be bullish, but again, we could see a slightly more downside than people are suspecting to that 52K range if we do see the breakdown or of this particular range here. And again, just a scale invariant function, whether it's between 70 and 60 or 70 and 52, it really doesn't make a difference. Both are bullish, so that's great. That's great news, I think. Know that you might have an opportunity or like an even better opportunity. So that's an awesome. But yeah, definitely this is a more defensive area because it's going to give you the data you want over the next week or two. So I would wait until the positions have formed before trying to make my next decisions. Anyways, I'm going to leave it at that. Now it's nice to know that both streams work at the same time. This is amazing. Thank you guys all for joining us today. I appreciate the support. Yeah. Oh, and Bear Family. Now that it's April, I've got some free time here, so I'm going to book a Zoom meeting. We're all going to have monthly Zoom meetings again. So thanks for that. Stoked to see you guys on the Zoom meeting as well. You should get the email updates in your inbox shortly. Awesome. Look at this. Stop streaming.